Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, August 9, 2019. As always, please hit the like button and subscribe to this channel. I finally got a new microphone, so the sound will be different somewhat. The old one kind of died on me. So we'll look at quite a bit of stocks today, quite a bit of different securities. You can see it's pretty dense video. We'll look at the stocks, if the correction is finally over. The REITs are being pushed to all-time highs as the interest rates move lower. Also, the solar stocks went to 52-week highs as oil firms approach 52-week lows. So that's 10 versus XLE. We'll look at a couple of recent actual trade examples, and that's for MacDonalds with a 25% gain and LYTX with a 58% gain. Some people like to trade bearish setups during the overall bull market. I personally don't like it, but if you like it, then we'll look at a couple of examples, and we'll look at Chinese shares versus the mainland Chinese shares, SHR versus FXI. And treasuries approach all-time highs. So in my opinion, this is not a great thing, because this is more of a flight to safety kind of a situation. As is gold, it was a 6-year high this week. Pullback is very likely, but the fact that it's hitting 52-week highs and 6-year highs is really not a great sign for the overall stock market, I think. Weakness in euro and sterling outweighs the strength in yen, so we'll look at EURUSD, JPY and British pound, and we'll finish off with crypto review as Bitcoin approaches 52-week highs while Litecoin and Ethereum lag. So let's first look at S&P 500 futures. Once again, throughout the presentation I'll be using these 4 lines on the chart. These are actual indicators, and you can get them for your TradingView account, and you do not need a paid TradingView account. You only need to have a regular TradingView account, and you can apply the indicators by looking for Master Charts Trading. Now these are actually locked, so you will need to first sign up, and then I'll open the door for you. So S&P 500, generally speaking, is looking good, because there was really no breakdown. I mean, there was a pullback from the fresh highs, and I was saying the same thing. If you listen to my previous videos, I was just saying that it's basically, needs to pull back, because this is a quite overbought. Nice move, of course, but it is overbought. So we got a nice big pullback. Didn't get as far as I wanted it to get. I wanted to touch the blue line, which was at 2762. Didn't get that far, but overall still I think is a bullish chart. Same goes for S&P 500 ETF SPY. You can see a pullback from the recent highs, and then immediately a snapback higher. So overall, so far I don't see many issues here. The same goes for QQQ. Same goes for Dow Jones. Very similar general patterns. So overall, we want to think about stocks currently, and we want to think about buying stocks. We do not want to think about looking for tapping patterns yet. Real estate hit fresh record highs. These are all-time highs. It makes sense because the bonds are pushing higher, so the interest rates are dropping, and it would make sense. I mean, I'm already reading headlines where there is now a new refinance rush, and people are trying to refinance their mortgages. It makes sense because the interest rates are so low. So yeah, you might want to refinance that. This has the effect of pushing the real estate investment trust prices to fresh record highs. Overall, obviously a bullish chart. We are trading real estate. Latest alert was back in January of this year for a very nice gain of about 15% or so. But there is also dividends that are coming in here. So some sectors obviously are not participating in this advance of the general stock market, and one of those sectors is energy, XLE. And you can see basically the opposite. We can see that energy is pushing towards new lows, and this is a bearish chart. How do I know it's a bearish chart? Because we saw a breakdown back in October of 2018, where I'm hovering right now. And the breakdown, I mean the close below this yellow indicator line. Again, you can find out more about them, but basically what this means is the trend has changed, and for stocks I usually use the yellow line as my trend setter and the blue line as my bullish trend setter, because I want to give stocks the benefit of a doubt to the upside. Stocks have a tendency of going up, but in this case there's a clear breakdown in October here where I'm hovering, and then you can see a push higher. I'm gonna zoom in a little bit, and then you can see it better. So there's that breakdown in October, a push towards the great level to sell short, and if you actually shorted, then back here in November of 2018 you can see a nice move lower in your favor. Another opportunity, for example, here on 22nd of January of this year to sell short, and then another opportunity relatively recently, for example, right there on 13th of May. And overall, all of these trades would have been successful. Now, I personally don't like to sell or to short during the overall bull market in stocks, but some people are okay with that. So energy is pushing towards new lows, while solar ETF actually is doing the opposite. It's a 52-week high. You can see we were trading solar. There were 3 alerts here. You can see back in April and as early as February for a very nice 33% gain. You can see right there, actually a little bit even more than 33, almost 35% gain, and it looks like it's set to continue higher. So solar stocks is just doing great. You can see 52-week highs here. So overall, oil related are moving lower, solar is gaining. That makes kind of sense, because it actually is cheaper now, or quite cheap, to produce energy using the solar energy. Produce electricity using the solar energy. So overall, if you entered back here, beautiful trade, congratulations. Perhaps we'll see a pullback, but overall a bullish chart. Let me give you some recent trade examples. And for example, here's McDonald's. I'm not sure if I already showed this, but overall, it's a wonderful just trade. You can see today, on Friday, the 9th of August 2019. Today, you can see a new 52-week high, and I think this is an all-time high. We were trading McDonald's back in December of 2018, and then in February here you can see up arrows. These were actual alerts to the subscribers of MasterCharts Trading for a 25% gain. And look how easy it is. You really don't need to think too much. We just go ahead and enter on close above the blue line. So if we see a pullback towards the blue line, a dip below it, and then a close above it. And this is all we need to know. We need to just basically enter and close above it, and then we see a fresh push higher. So overall, congratulations to the subscribers. It was just a beautiful trade, and it seems to continue too. Another interesting trade recently, and this is actually a relatively recent IPO, LYTX. I just really like this pattern, and it really shows that you don't really need to be a genius or any kind of highly paid analyst to figure out if this is a if this particular company has some sort of a cool product. I know nothing about what they do. Like I have no clue. And all I needed to know is that I wanted to see if there was a close above this blue line. The stock was trading obviously below the red line here, and actually back here it was new lows. So all I needed to know if the stock is moving higher and did it close above a significant level. To me, a significant level is this blue line. It's a support resistance line. It just very conveniently is drawn for you using my indicators. So that's all I did is I was waiting for the close. The close did happen, and then I sent an alert, and then you can see just incredible run, 58% gain. I mean, biotech stocks, new biotech stocks sometimes run like this, so it's not terribly surprising, but it's just beautiful because the way this pattern looks, to me, it looks very appealing. I guess I call it chart porn. It just looks beautiful because you can see kind of like this mathematical pattern to it. So overall, no-brainer trades. Seriously, try to avoid as much as possible. Like you can see on this chart, there are no indicators, like there's no stochastics, there's no MACD, nothing of that nature. Notice there's no volume either. I just don't use it. There's no point. All I need to know is where the price is, and the price in this case was doing a correct bullish thing, and this is what I was looking for back in May of this year. Some people like to trade on the downside, so here is an example of such a possibility. Now again, I did not send this alert. This is Occidental Petroleum, but it is a good example because just today Anadarko Petroleum was finally bought by Occidental, and there is Warren Buffett that's involved and a lot of people, and I just read an article by Carl Icahn, and he said that this is one of the worst deals in the history, I think. That's what he said. It actually kind of makes sense, but I didn't know anything about financial ratios or voters of the shareholders, whatever, inside traders. I don't really care about that. All I need to know is where is the chart. What is it doing? Let's backtrack a little bit. You can see we were actually trading it back in September of 2018 at MasterCharts Trading, and we were trading it on the upside. You can see a couple of alerts, and they were successful trades. Eventually, we saw a kind of breakdown below this yellow line, and this is what I call caution. And then finally, right there on the 29th of October, you can see a breakdown below the yellow line, and in this case this just means bearish security. Now I don't normally send alerts during bearish alerts during the bull market, but some of them just kind of jump out at you, and you can see the stock from December low kind of just meandered sideways, finally right there on the 8th of April, right there where I'm hovering, it touched the red line and then closed below it. And again, this is all I need to know. If I'm shorting something, I want to see the opposite. I want to see price come up to the red line, touch it, and then close below it. So this is not an alert, but I wanted to illustrate how you can trade stocks to the upside or to the downside. It actually makes no difference. Some people say that trading them to the downside, trading stocks to the downside is more rewarding because it is quicker. Sometimes the collapses are very quick. So in this case, you can see a very nice, easy, obvious trade. Again, I don't use volume, I don't use stochastics, I don't use any of that stuff. So overall, very visually simple chart. And you want to be as simple as possible in trading. You do not want to complicate things. So if you shorted it, then congratulations, that's a nice 33% gain in your favor. Obviously you can buy puts or sell calls if you're sophisticated enough. But you can actually now buy puts through Robinhood, and I trade through Robinhood, so you can trade them for free, trade options for free. So a nice move lower there. Another interesting price pattern here is for Granger, GWW symbol, and this is a industrial firm. Now, also, we were trading on the upside as early as November of 2018. Then you can see I sent in several caution alerts because we saw a price drop below the red line, more caution, more caution. Eventually there was a breakdown right there in the 30th of April where I'm hovering, and this is basically means avoid. Now avoid could mean sell short, or avoid could just mean don't buy. If you're an aggressive trader, then you can also trade on the downside. I personally don't like it during the bull market. So if you so desire, then my personal preference is to wait for a bounce towards the red line, as it occurred right there on the 24th of July and late July. The stock price bounced, made a high above the red, and then just closed below it right there on the 29th of July. So this is all we need to know. Is this a bearish security? Yes. How do we know? Because there was a close below the yellow line and not yet a breakout close above the blue line. So in this case, we just know that it is a bearish security. And there is the possible alert, and this is already about 9% gain if you shorted it. I mean, again, during the bull markets, I would personally not want to do this because there is a tendency of general stock market to kind of muffle the downward movements in the stocks. But overall, this is just how I do it during the bear markets as well. If there is a bounce towards the red line, then we can sell short at the red line. Okay, so let's move on to a little bit of a more geopolitical theater. Here's Chinese shares, FXI, Chinese shares. We were trading Chinese shares. You can see that occasionally you get a failure. There is not 100% system. My personal success rate is around 75%. So about 75% of my transactions turn out to be in the plus, turn out to be profitable. In this case, you can see that there was a drop. So initially there was a breakout right there, and then we saw a drop below the red line on the 1st of August, and then eventually on the 5th of August there was just a collapse below the yellow line. So this is just a no-go. I do not want to be buying this particular ETF. If I had the position, I would have been stopped out by now. Interesting thing is that there's another ETF called ASHR, and these are mainland shares. You can't really directly buy them, but you can buy them through this ETF. And the mainland shares look a little bit better. You can see that right this instant the price is still between the blue and the red line, so there's still a chance it could rally. I mean, there's always a chance all of the stocks could rally, but ASHR, the mainland Chinese shares, look stronger than overall than the large cap Chinese shares, FXI. Don't exactly know why is it. I mean, I'm sure you can explain it with tariffs and the various things that are going on geopolitically. I don't really care because I don't really, what can I do? Yeah, okay, there's geopolitical tensions, but I'm only trading the chart. I'm not really trading geopolitical tensions. So in this case, basically I want to look at the chart and I want to ignore pretty much everything else. For example, geopolitical tensions, which is all I do. I ignore the news as much as possible. Alright, let's switch gears a little bit, and here are the bonds. So our big trade, look at this. Several alerts, one in December, one in January, one in March. These white arrows were actually my entries. Both successful. The latest one on 11th of January produced almost a 20% run. Now I did take quite a bit of profits. You can see I sold 3/4 of the position, so I'm still holding a quarter. Now I think I mean, you can put all kinds of indicators on this, stochastic, whatever, MACD, it doesn't matter. It's all the same thing. So it will show that yes, we're indeed overbought. I'm more concerned about this advance from the late July into 7th of August. I mean, this is a very steep advance. And I think now this advance is probably coming to an end. Although the all-time highs are like literally right there. Just a tiny bit. We could get to the all-time highs very easily. So I feel like that some sort of a top-end pattern is maybe unfolding here. So I definitely would not want to be buying here. I only want to be buying on a pullback towards the blue line, and I don't see any, so there's no point trying to get in. This is the type of trade where you just are very happy that you're sitting in a position, you're getting your dividends, and you're still getting the capital appreciation, but it is definitely overextended. So I will just kind of wait and see where it goes, but I have no problem just exiting and moving on with my life. Same goes for IEF, intermediate term bonds. There's the alert in December of last year, and just an enormous run in our favor. Short-term bonds, BSV, right there, 31st of December alert was also sent where I'm hovering, and it just continued higher. It just keeps going sometimes. So briefly, I wanted to show the yield curve. So you can get this on StockCharts.com. This is called a yield curve. You can look for it if you click on charts, and you can look for a dynamic yield curve right there. Why do I care? So this is a little bit of a fundamental research, and I'm not a big fan of fundamental research, but let's look at it from a technical perspective. So right this instant, it is 9th of August. You can see the yield curve is goofy looking. So normal yield curve looks like this. This is a normal yield curve. So it is the at the 3 months yield should be lower than the 30-year yield. What's happening now? We got the 3 months yield higher than basically like a 15-year yield or something. This is not a normal looking curve, and in the past we had instances where similar inverted looking curve eventually led to a breakdown. Now notice where the yield curve began inverting in 2006, 2007. Somewhere in 2006, like in July of 2006, you can see the yield curve is basically already, the short-term yields are almost above the longer ones, and it continued for almost from almost 2 years until finally we saw a collapse, Lehman Brothers collapse, and then the 2007, 2008, or the 2008 collapse, and then a Great Recession. Can this happen now? Sure. You notice that it took a while for this to unwind, and the yield curve inversion did occur, so this is a legitimate concern. If we go back a little bit further, you can see a similar but a little bit different type of pattern in 2000, 2001, and the inversion happened like in 2000 here, in March of 2000, and then stocks decided to drop just a few months later. So here the cause and effect were quite close. Here the cause and effect were not as close in 2007. Will something like this happen now? I have no idea, but you know, it's possible. So we need to be on the lookout for this yield curve to continue inverting. Overall, the Federal Reserve was trying to cut interest rates. The overall result of this is that the shape of the curve actually remained the same. You can see just a few weeks, kind of like maybe here versus here. So it just kind of dropped, the whole thing dropped, but the shape remained the same. You can see here shape back in April, and now a shape in August similar, but just the whole thing is lower. And you can see the 30-year yield is below 2.32%, so it makes sense that people are trying to refinance their mortgages. All right, let's continue to one of my favorite subjects, and that's gold, XAU-USD. Gold has been also on a tear, and you can see a 17.5% gain. Several alerts, several subscribers are long gold and gold miners. We trade gold miners, individual ones as well. So here's XAU-USD if you can trade it. Here's GC1 exclamation point, which is a gold futures, also is a very nice gain. Now, I mean, this is 6-year highs. Right now I'm looking at the candlesticks. It doesn't look too bad, but you know, a pullback would be kind of normal because it's really sort of overextended. If the pullback materializes, then we will be looking for buying opportunities. This is still a very much a bullish chart. Here's GDX. My position, and sometimes this type of trades occur. Here is my entry on 31st of May. It immediately goes in my favor. I take profits. It just continues higher. I take more profits. It continues even more higher, and I take more profits. And now it continues even higher. So I'm trailing the remainder. I have about a quarter of the position remaining, but this is one of those trades that every single trader dreams about. It just keeps going. So is this the top? Sure, kind of looks like it. Maybe this is a shooting star because you can see a gap. I'm gonna zoom in a little bit. There's a gap up from 6th of August till 7th of August, and this is a classic shooting star candlestick right there on the 7th of August, and then there's another one today on the 9th of August. So it's possible that this is it. Let's wait and see, basically. As far as Forex is concerned, Euro versus US dollar, I kept looking for that breakout for Euro, which never occurred, but you can see it top in action right there around late June, and it topped exactly at the red line. So if you shorted it here, now there is a sweet gain in your favor of 330 pips if you shorted it here. Right now it's basically rebounding, and we'll see where it goes. British pound, my god, just completely collapsed. I thought it was gonna go higher. I entered long here on the 3rd of May, got stopped out. If you shorted it, and this is probably a good thing to short it, if you get stopped out, basically you have to reverse the position. So if you shorted it back here, that's a 694 pips. gain. USDJPY too, I got stopped out unfortunately, but then the security went in Japanese yen favor. So right now the Japanese yen is pushing lower, while the euro and the British pound are pushing. I'm sorry, I meant to say USDJPY is in favor of Japanese yen, while the British pound and the euro are in favor of United States dollar. But a very nice move for the Japanese yen recently. So I want to show this one. I actually posted this chart. This is a Japanese yen futures. If you have a futures account, I want to go over this chart. I mean, I just see kind of beauty in this chart. And I again labeled it as a chart porn. I just kind of want to look at it and examine it. So here back in May of 2019, you can see a move towards the blue line, actually a touch of the blue line right there, and then a move lower. I pointed this one out. Finally, right there on the 31st of May, you can see an obvious no-brainer breakout. Again, I don't. Do you see any volume? I don't see any volume. Do you see any stochastics, MACDs, etc., etc.? No, you don't need any of it. You can just see the price. And there's the breakout. A little bit of a pullback right there. You can see a touch of the blue line. If you got in there, congratulations. And then another beautiful pullback towards the blue line, and it's just a skyrocket higher. So overall, if you trade futures, you know this is a huge gain. All right, let's finish up with various cryptos. Let's look at Bitcoin. Now, this is a recent alert right there on the 1st of August. Before that, I actually myself entered Bitcoin on the 5th of May at 5,700, where I'm hovering. I kept selling various in various quantities. Finally, you can kind of see the bearish engulfing, an enormous bearish engulfing on 26th of June and 27th of June, right there where I'm hovering. Bearish engulfing just means that, I'm going to zoom in for those people who don't know. You can see this green candle right there on 26th of June, and you can see this red candle on 27th of June, and you can see that the red candle, the red part, not the sticks from the top and bottom, are engulfing the real body of the previous candle. So this is a classic bearish engulfing. It did prove to be correct. Nevertheless, I think still this was a opportunity to buy right there around mid-July, and we actually sent a couple of alerts, and those alerts were also successful. So the latest one proved to be about 22% gain. So overall, Bitcoin looks good right now. Litecoin, on the other hand, I feel like there is resistance right there at around 99.30. So you can see a touch on the 31st of July, on the 1st of August, and then a big one. This is a shooting star rejection kind of candle on the 5th of August, and now a pullback. So let's see if this pullback takes it further down towards the red line. If that happens, then we need to think about selling it, shorting it. Ethereum also kind of similar pattern. You can see a breakdown on the 14th of July. Not yet bearish territory, but getting very close. And I would say that if it gets to 188, that's it. All right, so that's it for this week's recap. Please head over to MasterChartsTrading.com. That's MasterChartsTrading.com. Click on sign up where I'm hovering, and we have now 3 different levels of service. You can get just the alerts, and you can get, as I keep saying, these types of alerts. You will get emails from me on daily basis, what I think is looking good, so I would be buying whatever is looking good, and could be shorting whatever is looking terrible. So those are the alerts. Trading indicators. So these indicators right there, this green, blue, red, and yellow line, you can have them on your chart. It is super simple. All you need to have is this TradingView account. You can see TradingView.com, free, no charge TradingView account. It works with that. All you need to do is sign up, $29.95 per month, so you can get a yearly discount. And obviously, if you want to get both the alerts and the indicators, then you can get both of them. The price is very reasonable, $49.95 per month. And of course, if you subscribe for a year, there's a sweet discount right now, which will not last. Also, I'm thinking about upgrading this service, the alerts and trading indicators, to maybe something like VIP, where some of these will go only to the VIP. Some of the alerts about various stocks and securities that we trade may go to the VIP. If you sign up right now, you will still receive everything, even if the future service will be upgraded. Okay, that's it for today's recap. Again, please share this video with others. Please like the video, and of course sign up once you're ready. Thanks for watching. Have another great trading week. Bye bye.